Yo, what's up guys? Welcome back to a brand new video, and today I want to talk to you about compression and liquidity and what those mean, how you can act on them, and what to expect when you see it on your chart. Now, funnily enough, on the 30-minute chart right here, we are in kind of a compression. And what I mean by that is this low until the latest low, and you just draw that line out. This high, I mean, you can take this wick if you want, until the latest high, you can draw that line out. You can see we're in a compression right here. So what you would expect is somewhere here, the compression is going to, well, keep compressing until at some point, and that is what you should expect, it breaks out. And a breaking out can be either downwards or upwards. Now let me remove these scribbles of the last video, which was about support and resistance. Make sure to check out that video. So the reason why it breaks out is because buyers and sellers are pressing the price, and at some point the price almost stands still, which is at this last moment, and then one of them wins. Very simplified. And then you see a strong pulse. So let's find a compression from the past so I can show you what it looks like. Okay, so here I kind of found one. If you go on a lower time frame, you can see it even better. But let's just say I stretch it out a little bit. You can see the highs are going down and the lows are going up. And then boom, you shoot up in this case. And then the point of the compression usually has most volume. So then when we came down back to it, we did shoot below it. But you can see the interaction with that point, and then we went up, and then here again, actually we went up, and then here in the wicks almost perfectly, and then we went up. Now the other scenario, the downward scenario here, would have been down until right here, upward around right there. Now we did go further, but just to explain it, why do we stop here? Why do we stop here? That's because the liquidity is there. Now what is liquidity? I've already talked about where the volume is. So if we scan this a little bit, you can see some volume here because there's some more candles here, but you can see where there's volume with these peaks, and basically this turned into a tiny range. So the buy orders are here, and then the sell orders are here. And what you create is kind of like this wall of money. So the people who want to buy here because this is where people put their stop loss. And what is a stop loss? If you took a trade, let's say just randomly here, this would be my stop loss. So if the price would go down at this point, I would be stopped out with my stop loss, and I'm selling with a slight loss. Now the sell order is liquidity, aka money that another buyer can buy, right? So the bigger orders, so like the people with a lot of money into trading or investing, they look for liquidity, because if there's not enough sell orders to fill their buy order, they don't get filled fully, which means that only a part of their order was bought because there wasn't enough people selling at that point. Now, a good way to visualize liquidity is with a liquidation heat map. You can Google this. In this case, it's based on Binance, Bitcoin, USDT. And what you see here, basically the yellow is where most money is. And you can see it's below where the price is, or above where the price is. And that's where the sell orders or stop losses are. So if you are shorting in this scenario, which if you didn't see the previous video, shorting is basically selling, but you're earning as the price goes down. You're buying in reverse. Let's say you shorted here as an example, and you want to have your stop loss above these last wicks. Again, if watch the candlestick video if you don't know what I'm talking about. The wicks is the thin part. And the price did go here, as we saw. These short orders are being canceled. So the people who sold now buy because it's reverse buying. So you're canceling it. It's a bit hard to explain, but because they were hoping to go down, but we went up, they said, no, that's enough loss. And they canceled their position. So their sell order turns into a buy order because they were shorting. That's the best I can explain it. Anyways, then you get this thing called a short squeeze, which basically the sell orders which got stopped out here become buy orders, so you have like more power even. But the reason I'm telling you all this is because this is why we look for liquidity, like on this heat map as an example. Like if we just look at this chart right here with the liquidity map, we saw this wall of liquidity build up way before, and then we almost went there, we didn't quite hit it, and then boom, larger orders were filled. And after that, we did go up. Now that's not always the case, but usually liquidity is a good place to buy or sell, but there's no guarantee. Again, there were sell orders here for a long time and they got hit. And yes, we did go up a little bit. There was also more sell orders here and it wasn't a lot. You can see the bright yellow is where most sell orders are. And so far, if you sold here or here and you bought here, you would have been fine. Now, I'm not buying or selling purely on heat maps because these are planned orders and they can be taken away, but it's a nice tool to visualize on the chart where liquidity is. But the way to look for liquidity is simple but not easy, if that makes sense. So right here, we actually grabbed this liquidity, which was under this little compression block, and we went up. Now here, we failed multiple times to get above this. We crashed down, we went back up, and then right above here is going to be all these stop losses, right? So the sell orders, which is liquidity. And then we went straight for that basically, and then we went down. Now you can kind of see liquidity here as well. We had this low, then we had a high, we had a higher low, we had a higher high, and then we kind of started losing it. And then we actually grabbed liquidity here, and then we went further up. Same thing here. We had a low, we had a high, we had a higher low, lower high, which was almost looking at the start of a compression. Then we actually didn't know what to do here, and then we dropped down, tried to grab some liquidity, we failed. Then we tried to grab the next batch of liquidity right here, and so far we have succeeded. Now price action is not always perfect, especially on smaller time frames like here, but this is a pretty clear compression that's going on right here, which is great for the video. I didn't plan this obviously, but let me try to look for one more compression. Okay, so this one is not really a great example of compression, but if you zoom in enough like that, you can kind of see it, and then you start losing the buyer momentum, and then boom, you drop down, you break out downwards in this case. Again, not a great one because it's so tiny. Now here's a tiny compression. Again, price action is not always perfect. And then we went up, and then on the point of compression, we tested back and we went up. I'm having a little bit of a hard time actually finding good compression examples, but I hope you guys kind of understand what I'm trying to say. This is kind of the best example, which is most recent price action. But yeah, if we look at this little upward pulse and then us going down, 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 down before turning around, you can kind of see, you know, we tried to get above here, we failed. We tried to grab this liquidity, we did, but then we didn't go up further. We tried to grab lower liquidity, which we did. Tried again, we failed, tried to grab liquidity under here, we did. We tried, we failed again. Tried to grab even more liquidity under it, and then we kind of failed, and then we actually made a higher low and then a higher high, and then that's kind of how this started. And once we broke this resistance, if you haven't watched that video, check it out. Then we tested back with a higher low, and boom, we have a breakout, which no, it was not compression. There can be breakouts without compression, but usually when you have compression, you either test it back up here, and then some people call it a fake out because you can't break through it, and then you actually go down the opposite way, or you just go straight up, or you go down to the outer edge of the compression and then you bounce up the other way, which is like the reverse fake out, like upwards. So yeah, that's basically what compression does. So how can you act on it? If you see the beginning of a compression, let me just draw it in for you guys. If you see this point and then we're like halfway here, you can kind of tell we're in a compression. So what can you do? Now, if you're day trading, being in a compression is not great because that means the moves are going to get smaller and smaller, and your profit is going to get smaller and smaller. And the later you are in the compression, the more risk you're taking, because a compression downward doesn't mean a downward fall or upward doesn't always mean an upward pulse. And what I usually would say is try to trade on the outer edges. So have a short ready over here and have a long ready over here, which means buy and sell order. So the short would look like this and the long would look like this. Obviously this is not a perfect compression, but you get the point. Now for investing, if you see compression, I think it's worth investing a little bit if you wanted to anyways, but not all of it. So if you go down to this part, you can invest some more, but if you already invested a little bit and we do shoot up or even more above, then you didn't miss the boat. Again, investing, you should do it for a longer term. But yeah, if you're swing trading, which is basically on the daily chart like this, you try to play the giant moves, which can take weeks, then yeah, I would still kinda trade invested. Swing trading is a whole thing on itself. I might make a video on swing trading versus day trading versus investing. But yeah, I hope you guys have learned something from this video about compression and liquidity. These are not the easiest topics, to be honest, especially liquidity, but the heat map does make it pretty clear where liquidity is. So you can use that as a tool, but I wouldn't trade purely on that. Now for compression, once you can spot compression, that's a good thing because then you know not to trade at the last moment of it and instead look for the outer points of the compression, which is usually at the start. So in this case, as kind of drawn, I mean, technically this is the outer edge and this is the outer edge. Those would be your targets for your long and short trade. You can go for the liquidity here or liquidity here, which would probably be around here. Again, I'm not a financial advisor. Always, manage your own trade and where you want to take your entry. Anyways, before I'm yapping too long, please let me know in the comments if this was useful. Join the Discord server where we discuss stocks, Bitcoin, the charts, and more. And yeah, please subscribe to the channel, leave a like, and see you guys next time. Peace.